Hello, everyone. We'll just wait a few minutes for everyone to join. All right. Good morning, good afternoon, good evening to all of our clients connected from all over the world. Welcome to the UNJSPF Global Town Hall. I'm Pauline Batista, a member of the UNJSPF Communications team, and I'll be your moderator today. We expect this town hall session will last about 45 minutes and will provide you with information on how to stay in touch after. The session is live on UN Web TV, and you have the option to select French language for interpretation by selecting Français at the top right of your screen. So without further ado, in conversation and answering some of your questions, we have the Chief Executive of Pension Administration, Rosemarie McLean, and the representative of the Secretary General for the Investment of Assets of the United Nations Joint Staff Pension Fund, Pedro Guazo. Thank you both for being here. Rosemarie, the floor is yours.
Thank you. It's a pleasure to be here with all of you today. This is our third town hall that Pedro and I have done. I want to start with a couple of key messages, one being that our clients can be assured that their benefits are secure. We got a lot of questions on this topic before the town hall, and so that's really how I want to start off. The fund is financially strong, and that's demonstrated by our actuarial evaluations that are done every 2 years and our asset liability management study, which is done every 4 years. In fact, the participant numbers have a limited impact on the fund's solvency, and this is actually a scenario that is run as part of the actuarial evaluation. And when that was done in 2023, the conclusion was the fund is in very good shape, even if the number of participants was to decline. The fund is continuing to modernize our systems and tools to continue to deliver excellent service, and we're committed to being transparent, clear, and timely in all the information we provide to plan participants and beneficiaries through a growing number of channels. Just by way of background, I think it's important for everyone on the call to remember that this is a defined benefit plan. Unlike a defined contribution plan that is very dependent on investment returns, the value of your pension is actually not dependent on the fund's performance so much as it is on a formula. It's based on factors like your age, your years of contribution, and your salary. And it has a very important benefit, which is that it's adjusted for inflation each year. So what is solvency? It's really the ability of the fund to pay benefits over the long term. So what we're looking for is a balance between the contributions and investment returns and the benefits we're paying now and long into the future. And when I say the future, I'm not talking about 5 or 10 years. We're looking out 60, 70 years out, and the operating expenses. Is there a balance between the two? And that's monitored through the actuarial evaluation and through the asset liability management study. So when we look at the fund's solvency position, over the last 33 years, it's been well within that target of 2%. And it shows that the fund is in very good financial health. I think it's important to realize that the fund is that the solvency is actually monitored by the board and its committee, the FSALM, which stands for the Fund's Solvency Asset Liability Monitoring Committee. So it does get a lot of attention. And really, the actuarial evaluation is trying to assess whether the current contribution rate, which is 23.7%, and it's 7.9% of your salary and 15.8% paid by your employing organization. That's how we come up with 23.7. And so we're really testing whether that's sufficient to pay all benefits, current and well into the future, well into perpetuity. And as I said, you can see that the fund is in a very strong solvency position. So moving on to the strategy of pension administration, we call CARE, which stands for Client Focused, Action-Oriented, Relations Builder, and Efficiency-Driven. It really has 3 main components. One is that we want to improve the client experience. The second is we want to modernize the pension services. And the third is to strengthen the relationships with all of our key stakeholders. I'm pleased to report that the fund continues to perform extremely well. Pension processing in 2024 outperformed our benchmark in that 93.2% of cases were processed within 15 business days of receipt of all documents. Our current wait time, if you have occasion to call us, is less than 22 seconds. And over 78% of clients are very satisfied with our website. For pensioners, our monthly payroll continues to be issued on time. We have a COLA adjustment for the US dollar track as of the 1st of April of 2.8%. And our payments are being now made in 19 different currencies. And we continue to work with member organizations to enhance the separation to pay process and limit the amount of time it takes between the end of a person's career and the start date of their pension. Turning to our modernization initiatives, we introduced UNJSPF Connect, which is a new customer relationship management system, in November of 2024. We're currently in the process of developing a multi-factor authentication system that should be released in the next few months to enhance the security of our member self-service portal. And we're preparing for a new financial suite in 2026. Also, we now have over 37,000 digital certificate of entitlements. That's the proof of life from our beneficiaries. That's as of March 2025. That represents over 51.5% of the eligible benefits. And we were just recently recognized in the DCE as the first UN solution to be ISO certified on responsible and ethical use of AI. In terms of outreach initiatives, at the beginning of 2024, we introduced something we called the Pension Townhall sessions. So since January 2024, we've held 17 of those sessions in both English and French. We've had over 19,000 people attend, and we always record those sessions, and we've now had almost 32,000 views on YouTube of people watching the sessions afterwards. We also have the facility real-time during those sessions to answer questions, and over 3,000 questions have been answered by our staff during those sessions. So it's been extremely well received by our plan participants and beneficiaries. We've also expanded the channels and ways we can reach us and find out more about your pension fund. We saw a 44% increase in our website. Our social media channels have expanded, 63% increase in traffic there. And we continue to produce newsletters. We sent 11 in 2024, and over 250,000 people are subscribed to it. And then we have booklets and our annual letter. So lots of ways for you to find out more about your pension fund. More specifically, this is a screenshot of our website, and I've just highlighted the Contact Us bar on the top right. If you click on that, you'll go to this page where you can either send us a message or you can call us. We have toll-free numbers globally, and we are open 24 hours a day, 5 days a week. So regardless of what time zone you're in, we're here to help and answer your questions. More specifically, on the member self-service portal, people often ask, what can I find out about my pension on the portal? Well, if you're a participant, you can check your personal information, including your current marital status and dependents. Probably the most important feature, and that people really appreciate, is the ability to run pension estimates at a variety of different retirement dates. You can access your annual pension statement and submit forms, and also requests to validate, restore, or transfer your pension rights. If you're a beneficiary, you can update your contact details, and I really want to emphasize how important it is for beneficiaries to keep us up to date when your personal information changes, whether you move or whether you change your email. We sometimes have great difficulty contacting beneficiaries because we don't have up-to-date information. So please make a point, if your information changes, to remember to contact the fund. You can track all your payments from the fund, access your annual certificate of entitlement, and also access forms and submit an emergency fund request. So in summary, from pension administration, I think I really just want to emphasize that the fund is very secure, and I would really encourage everyone on the call to be proactive. It's never too early to understand your pension benefits. There's a variety of different channels and information available on our website. You can take advantage of the ability to do pension estimates. So I really want to encourage you to understand your benefits. It's an important benefit as a staff member. And there are just a lot of different channels available to you. There's videos you can watch. So please stay in touch. And with that, I'm going to turn it over to Pedro for an update on the Office of Investment Management. Pedro?
Thank you, Rosemary, and thank you, Pauline, for the opening. And I want to take a small pause here from the presentation. And good day to everybody. We're definitely living through extraordinary times, right? Not only of what's happening inside the United Nations system. Most of the organizations around the system are facing declines in their funding sources. But also, we're seeing a bigger impact on what's happening around the world in literally all the countries around the world. And of course, that has created a lot of anxiety and volatility in the markets that has affected us all in one way or the other. Rosemary and I, together with our communications teams, we're always thinking better ways to keep you informed on how things are going. We know that all of us, because remember, all the staff of the pension fund, we will all also be beneficiaries of our pension fund. We're always thinking on what questions you might have that need answers to keep your peace of mind. And that is why, from time to time, on an extraordinary basis, we put out there in the different channels of communications that we have created for you, we put together messages to give you assurances on what the situation is, right? And we have a commitment with all of you to update you on good news, but also when there are bad news, right? But because whenever you wake up and you hear whatever is happening in the markets, one of your first questions must be, what is happening with our pension fund, right? That's a valid question that we have to have an answer for. That is why some of you, probably most of you, have seen a communication that we put in our website on Monday, and it went also on iSeek on Monday, explaining you how the movements from Thursday and Friday affected our portfolio, but also explaining you how it has to be seen, right? How the value of our portfolio has to be compared always with a liability. Remember, we are a pension fund, and the purpose of the assets that we have, as Rosemary explained, is to pay all the pensions to all of us and our beneficiaries when the time comes. So it's important to see the relationship between our assets and our liabilities. And it has been a commitment to all of you to put in our website relevant information so that you can track both the value of the assets and the value of the liabilities as soon as they are updated, right? The communication that you can see on the screen, you can find it again in our website whenever you have time. And what you can see there is, as of Friday, the market value of our portfolio declined to $92.9 billion, which meant a 2.9 decrease over a week. But if you compare it to the $83.2 billion of the value of the liability as of the last actuarial valuation that was approved by the board and by the General Assembly in 2023, you will see that we have an ample margin on the value of the assets, right? So we in the investments team, we're monitoring every day the evolution of the portfolio. We are lucky to have a very experienced team that has gone together at least for 2 different crises with good results. So you can be certain, as Rosemary highlighted earlier, that we have enough assets to pay for all the benefits, even in the most extreme scenario, that is the one that you can find in our website. So with that, let me move a little bit towards the information that you can have, that you can see on our website, so that you see, because remember, one of the good practices that we try to make on these town halls, both Rosemary and I, is to show you what is the situation of the fund, but also to show you where you can see the information in our website so that you can track it and see it for yourselves whenever you have a question. So first of all, for those of you that are more anxious than others, we, as we highlighted last year, you can check the evolution on a weekly basis of the market value of our portfolio. You have the link there. We have made a nicer, newer format that you can see the value of the total portfolio, what you can see at the top of the screenshot, the $92.9 billion that I was making reference to. And if you scroll down, you can see the different components of that portfolio. You can see the public equity, the fixed income, private equity, and so on and so forth if you scroll down. One of the things that I would like to highlight is, if you notice, the impact of the crisis that we are living through currently was less than what it's impacting other portfolios. And that is because we decided a couple of years ago to reduce our exposure to public equities, right? We decreased from 53% allocation to public equities to only 43%, and we increased our allocation to fixed income. That is why the impact on our portfolio was much less than what you see in other portfolios. And the second thing that is helping our portfolio to hold on is the US dollar. And as you know, the US dollar is our operational currency for our fund. The US dollar, what this crisis has shown us yet again, is that the US dollar continues to be the safe haven when there is volatility in the market. So we are in a good shape. Of course, we were affected because we have exposure to the public equities markets, but the exposure was contained thanks to the measures that we have put in place. Now, for those of you that also want to verify what is the value of the portfolio, we updated on a monthly basis, and we put out there a report that is way more detailed than what you can see on a weekly basis. What you can see in our monthly updates, you can see the total value of the portfolio, you can see the evolution since 1993, how the portfolio is composed, how much is managed internally, how much is managed externally, and then you can see the nominal rates of return historically for different periods of time. You can see the real rate of return, which is the most important rate for all of us, and then you can see the evolution of each sub-portfolio. Let me go back to the previous slide to show you a little bit of what is there. What you can see on the left side of the chart, you will see the historical evolution of our assets since 1993 all the way to February 2025. We updated normally the month after, so the figures as of March will be available probably around the 20th date of April, because we need the information of inflation to be available to show some of the data. So you will see the most updated figures that you see there are the February ones. And it's very interesting. I like this graph because what shows us is, especially when we are going through different crises like we are going now, is the fund has been through many, many crises through our history. right? If you see in the years around 1999 to 2001, you might remember we faced the dot-com bubble. We saw a sharp decline in the market value of our portfolio, but then it recovered. Then if you see in that graph the years 2007 to 2009, we saw another sharp decline in the market value of our portfolio. It was the great financial crisis that we went through, and then the portfolio recovered again. Fast forward, and we saw an exponential increase on the market value of our portfolio. Remember the decade of 2010 and the beginning of 2020 were very good years where we were having steady returns in almost all the asset classes that allowed us to accumulate a sharp increase in the market value of our assets. And then, if you see the results as of 2021, COVID came and the high inflation rates also took over because of all the reasons that you know about. So we had a sharp decline, and we went from the $91 billion record high that we achieved in 2021, we dropped all the way to 83. But then once again, we recovered. We reached $97 billion as of the end of February, and now we're going through this crisis, right? As I told you, we dropped to $93 billion as of last Friday, and we know that since we are a long-term investor, we are very disciplined. We know what measures have to be made in order to recover. We will implement the same methods, the same tools that we have put in place throughout all these crises to recover the price and the market value of our portfolio. The two other graphs that you see there on the monthly update, you can see how the portfolio is composed. I made reference already to the 43% allocation to public equities. You can see an allocation to fixed income to almost 40%. And you can see our exposure also to private markets, both private equities and real estate and infrastructure. And then on the right-hand side, what you can see, which is the core capability that we have in our fund, is we always try to be mostly managed internally. We have, as I mentioned earlier, we have an amazing professional team that has the ability to react right on time to the different needs over time to reallocate and rebalance our portfolio, which gives us a very good capability to react. That is why we have these internally managed portfolios as the larger part of the portfolio. And of course, that gives us another edge in terms of cost of investment that we will talk about. If you keep scrolling down, what you will see is the nominal rate of return. Remember, we try to monitor the 3 years comparison against our benchmark, and you can see also the whole history, how this 3-year rolling compares to our benchmarks. You can see also, if you keep scrolling down, you can see, as I mentioned, the real rate of return, which is the most important indicator for us. We measure it on a 15-year basis. What you can see there is our real rate of return as of February was 4.3%. It's way above the minimum 3.5% that we have set for ourselves as our investment target. So we're in very good shape. And this excess return that we have on the real rate of return explain why we are so well funded, right? Remember that we have a funding ratio of 111%. It is because we have historically, if you can see, even on the 50 years measure, we have historically produced a return that is way higher than the minimum 3.5% that we need to be fully funded. So this is very good news for all of us in the long term. If you keep scrolling down, as I was saying, you can see the breakdown of the performance of all the portfolios. You can see some other risk metrics and a lot more information. Now, how do we get here, right? What do we do in the Office of Investment Management in order to achieve that long-term real rate of return, keep a long-term perspective, generate returns on a consistent basis, even though we are facing some crisis? Well, we always try to achieve 6 different metrics, and we measure ourselves with these 6 metrics based on external information, so that whenever we tell you that we are something, if we're transparent or if we're safe or if we're transformational or effective or efficient or responsible, it's not only us telling you that we are that, but we have external independent sources that corroborate that we are what we're telling you that we are. So these are our key performance indicators. And let me start with transparency. Rosemary made emphasis on all the information that we have available on the website, and on a yearly basis, we do a whole review of our website to see what information is relevant that it's not there, and we try to fill in those gaps. And one of the sources of satisfaction for all of us, for Rosemary, myself, and our communications teams, is that 99% of the questions that we always get in the different town halls, in the different meetings, in the board sessions that we attend to, 99% of the questions can be answered with information that is available on our website. So that makes us very proud. And of course, we have an independent study that every year we get assessed and we get a rating when we're compared to other 300 pension plans around the world, and our rating on transparency has grown dramatically. As you can see, the first time that we did it, we had a 45 out of 100 rating. We put together a task force to increase it. We went all the way to 75, and now we just received the most updated figures, and we went up to 82. We're very happy with the sharp increase, but of course, there's still work to do to get to, we aspire to get to 100 as soon as possible. Also, in terms of transparency, we have an additional independent external auditor that certifies that all the information that I showed you when it comes to the performance of our portfolio is presented to all of you based on the global investment performance standards, right? So for 4 consecutive years, we have had this certification, which gives you assurances that all the information that you are given to has been reviewed and certified by an external auditor. So transparency is a big, big commitment to all of you. But we also have to be safe. We have $93 billion under management, and as you can imagine, our cybersecurity has to be top-notch, right? We get on a yearly basis certified by ISO. Some of you are familiar with these terms, but it's an independent party that certifies that you have the processes and the systems in order to have high levels of cybersecurity, but also on business continuity. So that gives you certainty and assurances that our operation is as safe as it can be. We also, for being part of the UN family, we aspire to be the most responsible asset allocator or institutional investor. So our commitment always pays off. So we get the best grades of the United Nations Principles of Responsible Investment, which is an alliance of 5,000 institutional investors and other investors that submit their information, and they're graded by this independent entity. We also are awarded the title of the world's most responsible asset allocator by another independent think tank. And we just got we managed to achieve the ambitious target that we have for net zero, and we managed to decarbonize 60% of our portfolio. Sorry, we decreased the carbon emissions of our portfolio by 60%, which was the target that we set for ourselves in 2021. All that without sacrificing the return of our portfolio, as you could see. And finally, we try to align all our investments, both the impact and all the portfolio, to the SDGs. We committed to be transformational and improve the culture of our office because we are convinced that good culture produces good results, and that's a commitment that both Rosemary and I have on this. On a yearly basis, we issue a survey working together with the UN Staff College, and we have great participation rates from all our staff, and you can see the agreement rate, and the agreement rate means how our staff feels that we are aligned to the United Nations values and principles in our culture. You can see there we went from 60% in 2021 to reach a 76% by 2024. And according to the Staff College, these rates are incredibly high, right? We're at the right top of good performing organizations. Finally, and what we're here for, and I showed you already the results, we are here to be effective. We're here to deliver a real rate of return of at least 3.5%. I make reference to this. As of 31st December 2024, the real rate of return was 4.1. I showed you that by February it was already at 4.3%. So we are delivering on what we have to be delivering. And of course, as some of you know, and you have this information available in our website, every year, by request of the General Assembly, we perform an analysis by an independent party of comparing our returns, our risk, and our cost with other 300 pension funds. And only 300 pension funds. And let me make a point here. The General Assembly is very satisfied with this report because what they have asked us is to compare ourselves with peers, right? And the only peers that we have, and we're lucky to have 300 around the world, are pension funds. So, as I said, every October, more or less, we publish this report. If you go to our website, you scroll down to news, you can see there and have access to the full report. The good news on the data from that report, and that report is made by this independent party, is comparing 5 years of returns. On a consistent basis, our return, in this case was 7.9% annual return for 5 years, was above the global median of 6.8%, and a peer group that they select 19 pension plans that they think that are similar to us in terms of style, in terms of size, and so on and so forth. So we are above the global median. And of course, given that we're achieving the real rate of return and we have very good comparison against our peers, that is why we have achieved this very comfortable funding ratio of 111%. And finally, we do all this. We manage to be transparent, safe, responsible, transformational, and effective by being very efficient, right? And this is something that we present to the board every year and to the General Assembly. Our total cost of investment, that means if you divide all the costs that we incurred to invest the $93 billion of our portfolio, is 31.6 basis points. That is 34% below what our peers spent. So while our peers spend 47.7 basis points on investing their portfolio, we only spend 31.6 basis points. And of course, this is very good because every dollar that we save or that we're more efficient is reinvested in the portfolio. And the reasons, I alluded to it, the three reasons why we're so efficient is because we're investing mostly all our portfolios internally. We're doing it with less staff relative to our peers. And of course, our salaries, since we're following the UN salary scale, are lower also than our peers. So that is our competitive advantage that makes us so efficient. So once again, I'm probably gonna stop here, and would be happy to tackle some of the questions. Thank you, Pauline.
Wow, thank you so much, both, Rosemary and Pedro. I feel like we always learn so much about very different aspects of the fund when the two of you are in the room. Before we start, I have to say that we received questions in advance, and in the interest of time, we focused on answering the ones that are most recurring. We addressed most of them, of course, via the presentation, and we remain open to answering personal questions through our official channels in terms of those of you who are listening today. And I believe it's time for our first question, and it's to you, Rosemary. So this first question concerns colleagues that are relatively new, and some other colleagues who are not so new, to the UN system and the fund's 25 member organizations. The question is, what am I entitled to if I have to separate from my organization?
This is probably the most common question that we receive from plan participants. It's, what am I entitled to? So if you have less than 5 years of contributory service, you're entitled to a return of your contributions plus interest. Your contributions, that 7.9% of salary that I referred to earlier, you would get that back with interest. If you have 5 or more years of contributory service, then you're considered vested, so you're entitled to a form of retirement benefit. Now, the amount of that retirement benefit is going to vary depending on the factors that I mentioned earlier. Your age, how much service do you have, etc. And so that's where I would really encourage people who want the answer to this question as it pertains to them individually to really go to our member self-service portal and run a pension estimate, and then you'll know for sure. And the nice part about that estimator is that you could run a variety of different dates, so if you want to do some planning with your family, all that information is there.
All right, great, thank you. So our next question to you also, Rosemary, is another one that's very often in our colleagues' minds, and it has to do with retirement age. So the question is, can I retire before I reach my normal retirement age, and how does that impact my benefits?
So the short answer is yes, you can retire early. Again, if you have that 5 years, then you're vested. You can elect an early retirement benefit if you're younger than your normal retirement age, and that varies depending on when you join the fund. It's either 60, 62, or 65. And you're at least 55 years of age if you joined the fund before the 1st of January 2014, or you have to be at least 58 if you joined the fund after the 1st of January 2014.
Excellent, thank you. I mean, it's certainly helpful to understand how your years of service qualify you for retirement and when. Now our next question is to Pedro. We're shifting to Pedro now. So how do we know that the UNJSPF assets are used only to pay benefits?
Yeah, thank you, Pauline. And yeah, this is a question that I have had a couple of times since, as I mentioned, the UN entities are facing some challenges in their funding sources. This is a recurrent question. It's very important to understand that we're a separate entity, right? And we have our own rules and regulations. And our rules in the Article 18 says that the assets shall be the property of the fund and shall be acquired, deposited, and held in the name of the United Nations, but separately from the assets of the United Nations on behalf of the participants and beneficiaries of the fund. So all the accounts where we have the money of the pension fund, it's under the United Nations on behalf of the participants and beneficiaries of the fund, and hence cannot be used by anybody else or for any other purpose rather than the mandate of the pension fund.
Thank you. That's great. I know a lot of colleagues were concerned about that. So our next question also to Pedro is related to mitigation measures. So What risk mitigation measures are in place to protect investments and ensure the long-term health of the fund?
Thank you, Pauline. I think that I could speak like for 3 hours about to this question, but let me give you the short version, because the important thing for all of us to understand is where does the Office of Investment Management and under which framework we work. And if you can see there, we put there what we call the oversight layers of the fund, right? And this is exactly all these layers of oversight, Pauline, are designed to secure the long-term health of our fund. And if you see right there at the bottom, the small circle is in number 7, we have our office, the Office of Investment Management. The first layer of oversight that we have is the Investments Committee. The General Assembly, when they decided to create the pension fund, they decided to create an Investments Committee with experts, independent, that gives us advice on the investments policy that design the long-term sustainability of our fund. If you go a level higher up, we have 2 different risk management committees. One where Rosemary and we sat together with all our teams on a quarterly basis, where we review all the risks that we're facing, not only the investment risk, but also operational, IT, and so on and so forth. And also we have our own risk management committee in the Office of Investment Management, where we drill down to more detailed and specific issues for OIM. Then, of course, we have at the 4th level, and number 4, we have the pension fund and all the committees. The board meets 3 times a year, and we come every year to review our financial situation, our investments policy, but also our budget. And also that board has different committees that meet on different times around the year. We have an audit committee, we have the committee of actuaries, and we have the committee that Rosemary made reference to, the fund solvency and assets and liability monitoring committee. Above that, we have our external auditors and our internal auditors. As you know, we are audited for our financial statements and all the other operations by the Board of Auditors, but we also have internal auditors, which in our case are OIOS. If you keep going further, also on a yearly basis, as I mentioned, also we go to the ACBQ, which is the specific and expert committee of the UN General Assembly that oversees all the administrative and budgetary issues of the fund. And finally, every year we go to the General Assembly to present our results and also to get the approval of our budget and get their views on the investments policy. So these are all external instances that should give you assurances that the health of our organization is maintained. And also, internally in OIM, we have our own managerial capabilities, we have our own internal committees, so that we discuss all the decisions that we make. So with this, I'm sure that people would be very confident that the resources are well invested for the long-term purpose of our fund.
Great. So we have one more question, and this one question is actually directed at both of you. So what happens to the fund if there's an extraordinary decline in the number of participants?
Okay, let me start, and then Pedro can add. I can say with confidence that if we saw a drastic reduction in the number of participants, there would be a limited impact on the fund solvency. And I can say that confidently because it's actually one of the scenarios that the actuaries run when they do the evaluation every 2 years. They run a variety of scenarios, but this is one of them. They even run a scenario to say, well, what if we were to close the fund, today? Would we be in a good position to meet all of our obligations well into the future, into perpetuity? And the resounding answer is yes. That's based on the 2023 valuation. So I think it's really important that people take some comfort in knowing that the fund is in a very strong solvency position, thanks in large part to the efforts of the Office of Investment Management. And so they really shouldn't be concerned that if we saw a decline in the number of participants, that would somehow have a huge impact on the fund. We know, based on the actuarial evaluation, that it would not. Pedro, do you have something?
Yeah, and what I would just like add, just for completeness, is, and Rosemary showed us a very interesting graph where she showed the balance of the fund, right? Where we have contributions and payments, returns of the portfolio, and the payments. What we would see in this case is that there might be a reduction on contributions while we have to pay still the benefits. So that would mean that the withdrawal of or the use of resources from the portfolio can be earlier. But as I mentioned earlier, we have more than enough resources to fulfill all our obligations in the long term, and we don't have a liquidity issue.
Thank you so much for the reassurance, of course. So as we approach the final minutes of this town hall meeting, if I could ask the two of you to think of a 30-second long message to leave with our colleagues today who are watching and listening. Pedro, would you like to start?
Yeah, Pauline. We're in a very good position. One of the things that I mentioned earlier is all of us in the pension fund, we will also be beneficiaries of the fund. So we have an aligned interest with all of you, and that is why I mentioned we're always thinking on what information it's relevant for you to maintain that peace of mind. So our job, what we do is we invest money, but what we're here for is to give you peace of mind.
Rosemary?
Yes, just building on that theme, I guess I would want to conclude with 2 points. One, just to reassure people that the plan is in good financial health. It's disturbing to me when we get questions from people who say, oh, I'm going to retire in a couple of years. I'm not so sure the fund is going to be there for me or for my family. Then I just really want to reassure people, and I hope we've demonstrated that through the information we provided today, that the fund is very, very secure financially, and it will be here for you when it's your time to retire. And then the second thing is just that we're here to help. So if you have questions, as I mentioned, there's a variety of channels to get different information, but please call us, send us an email. We are very responsive. We want to hear from you. We want you to be informed when it's your turn to take a benefit from the plan. And I hope that we have educated this audience and that they have found this time with us useful. So thanks for listening.
And go to our website.
Go to our website.
Thank you both, Rosemary and Pedro. That matters a lot. Thank you for taking time to speak with us today. That was a very informative session. Thanks to all of you who attended and, of course, sent your questions in advance. The recording of this session will be available via UN Web TV and published on our UNJSPF website. We strongly encourage you to participate in the upcoming pension town hall sessions on matters relating to your participation and benefits, starting, of course, with the next one on separation and pre-retirement essentials planned for 16th of April from 9 a.m. New York time. Please also follow us on our LinkedIn, WhatsApp, and YouTube channels where we constantly post updates. And please, of course, visit our UNJSPF website, www.unjspf.org. And do not forget, you can always reach out to the fund through various options available on the Contact Us page of our website. Thank you again. Take care. We'll see you next time.